here with Cheryl from Startcon at the Crypto Sydney Meetup. So how are you involved with Crypto Sydney Meetup, Cheryl?
So Startcon actually sponsors the event. So this space that we're in tonight is the Freelancer.com office, and Freelancer owns Startcon. So Startcon is Australia's largest startup and growth conference. We support startups from all different backgrounds and industries, one of which, of course, is crypto and fintech and everything that comes along with that. So we do try to support various events and different startups and anything really that we can. And we host a lot of events here in our space. So, yeah.
Yeah, and what other kind of companies do you host?
So we also host growth hackers. Their meetup here as well. We also host 2 meetups under the Startcon brand. So we host Tech Leadership Series, which is exclusively international speakers. When they're visiting, we try to catch them and bring them in here for a free meetup. And then we also host Startup Sessions, which is local Australian speakers. So we host many, many events in our space.
Yeah, and how are you finding the blockchain industry in Australia?
I think it's going crazy right now. I'm pretty impressed by a lot of various players and people in the industry who aren't necessarily just in the startup world. Like, we're seeing a lot of banks who are jumping on board, which is really not typical for a new startup trend. Banks typically tend to, be the last ones to come on board, but I'm seeing a lot of people that I wouldn't expect to be excited.
Okay, great.
So StartCon 2018 will be on November 30th and December 1st this year. We are expecting about 4,000 attendees, which is a crazy amount, and we'll be getting some really, really big names from all over the world to come out to speak in Sydney. So make sure you come, and if you need any work done, make sure you check out freelancer.com.
Thanks, Cheryl. It's a great space. So, contact Cheryl, and I'm sure she'll organise a great event for you. Welcome, Josh. So, can you share with us what Wolf Crypto is all about?
Thanks for having me. Yeah, sure. So Wolf Crypto helps companies who are looking to bring new ideas and existing business models to the blockchain. We usually help companies that are looking for marketing, hype, and who want to basically build smart contracts on their tokens and crowd sales, as well as source funding through our investment networks and investment funds ourselves.
Okay, so it sounds like if I had an ICO idea, I'd come to you guys and you would help advise me?
Exactly. So what we do is we mainly compromise on ICOs, advisory, and that would be from the ground up through technical and marketing. So we would basically help you from the ground up to help every single aspect that we can, even through smart contracts, so to speak.
Okay, so to promote it and also the tech side of actually developing the coin.
Yeah, from start to finish.
Oh wow, that's great. That's a great service. And do you specialise in a particular blockchain or platform?
Usually we've been working about 95% on ERC20 tokens, so usually Ethereum.
Yeah. Do you work on any other platforms?
We work on Neo, Bitcoin, but most of the time everyone who's doing an ICO these days is on the Ethereum platform.
So Josh, can you share with us what coins you've actually launched and worked on?
Yeah, sure. So over the last 3 months we've worked quite intermittently with a few successful blockchain projects such as Referium, TE Foods and Fabric. And right now we're finalizing crowd sales for Scramble Network and CProp. And as we speak, we got 2 very exciting blockchain projects. Unfortunately, I can't mention them just yet, but probably at the next Sydney Crypto Meetup, I can speak a bit more.
I look forward to talking to you about that next meetup.
Oh, great.
But the first 2, can you share what they're about?
Yeah, sure. So TE Foods is a supply chain blockchain. So we helped their ICO from start to finish. We even built their smart contract for them. So what they actually do, their business model is to basically have a sort of like a barcode for food. So let's say, for instance, and for animals, and let's say, for instance, you're working on a farm and you want to know where your meat comes from, you want to know where your apple comes from. So in the blockchain, TE Foods can monitor and regulate all those specific aspects. So it's basically a supply chain that revolutionizes counterfeiting. And it's going to be quite instrumental to the future to stop any issues to, like I said, counterfeiting, and to help people get to know exactly where their products come from. It's somewhat better, I think, than Wabi based on its token metrics. We basically raised 90 million USD. So the way that we structured the token metrics was in favor for the token holders. And it's been quite successful. At present, we're on around about a times 2 on the ISO market. And exchange discussions are happening as we speak. So I'm not giving any financial advice, but it's I would say from my retrospect, it's quite a good buy right now.
Okay, great. And the other coin you launched?
So we also launched Referium. This is a gaming product where it's based on referrals. This is an extremely large project, and it has had a lot of success. We launched it on was it OKX to start, and this project is going to do really, really well in the future.
So Josh, what else does your company do?
Yeah, sure. So past all the consultative work that we do, we actually manage and run investment channels on Telegram. So what that involves is that we provide detailed information and resources through and for ICO investors and daily traders. Our community's vouched by all our members. We base our community valued on our members, and if you speak to any of our members, they can vouch for the value that they provide. So guys, please check it out. We have a website, www.wolfcrypto.net, and please join our Telegram group, our public channel, where you can get a whole lot of insights. The more you communicate in the channel, then you can maybe be bumped up to, depending on your KYC, to our private channel where you can get even more insights. The world's your oyster. We're in the blockchain. We're here to make it better for everyone and intelligence traded.
This is a very interesting panel, and I'd like to kick off the chat noting that both Tobias and Fred are heading an OTC desk at the moment, and I'd actually like to ask about sort of what clients you have, and you know, are they family offices, are they institutional hedge funds, or are they actually wealthy individuals?
Hey guys, what's up? So basically right now we're only in the very early stages. So we've been, I guess, working with just, crypto investors. We work with a few ICOs, people who want to buy interesting coins in large quantities are tough to get, and we can do a good job of that, make markets. And then, yeah, whatever comes and goes right now, it's just such a growing economy, and you just, helping people out, get into the market, basically.
Yeah, so we're also in the very early stage of building this product up. So I'm working with Independent Reserve, who a lot of you guys would know, and they've sort of brought me in to advise and help them build their desk. My background's in derivatives trading for the last 10 years, so it comes quite naturally to me to pricing this in large quantities, and it's good to see some institutional flow coming in. We've got a lot of good liquidity partners, which I can see some of them are in the room tonight. And yeah, the sort of customers and clientele we're getting, there's a couple of crypto funds that are dealing with us, and I know there's a lot of others that we'll reach out to. And
What's in right beside you?
yeah, and we're also seeing a lot of wealthy individuals, sort of family office slash law firms that are actually providing some of the volume because they seem to have the expertise to deal with the regulatory nightmare that crypto can be. And yeah, and also just some big individuals, either investors that are looking to move money in or out, and quite a few traders that are arbitraging and piping money around the sort of global system of crypto.
So I guess a follow-up question to that would be, my understanding, and can correct me if I'm wrong because we have a crypto hedge fund, Henrik, here, is that traditional hedge funds aren't actually in the business of holding tokens and assets. So they often have custodians that do that. And I guess the question is, given that traditional banks aren't, as far as I'm aware, in the business of doing that, do you actually hold on to your crypto, or is that some services that maybe like Fred or Tobias can provide through their various organisations?
A little bit of colour I can add to that is I know Independent Reserve have a very good security and custodial system for their clients, and they are working on some custodial solutions. that isn't something that I built or developed, so I'm not an expert to speak on that topic. And then the little bit of colour I've got from the hedge fund space, and this was probably 6 months old, was saying some proportion, like 80% of hedge fund managers own crypto, but less than 1 or 2% of their funds do, just due to the complicated issues. But I'll hand it over to the person running the fund.
Yeah, right. So custody is still a really hard problem in crypto. So that's something that you have to take care of yourself. So we have a deep cold storage facility that we built ourselves. And we work with data security partners like SecureWorks in Melbourne around that. As you know, there is no third-party custodian of a diversified portfolio of crypto assets yet. That's probably very likely to change right now. There are a lot of organizations and companies are working that. BitGo recently acquired a qualified custodian in the US, and I think that's one of the hurdles before institutional money will enter the space, because custody is a big issue. So Goldman Sachs just announced that they are starting a crypto trading desk, and they're also going to do custody for customers. So that's a very big area.
Sorry, I was just going to say, Henrik, how does that go therefore with your trustee of the fund? So do they work closely with you?
Finchy, I'll just
Sorry,
give you
mate.
you got the microphone on over there, guys? Can you catch Finchy?
So the question was because your fund, you're sitting under a trustee of that fund, do you work hand in hand with them on a regular basis to actually go through the actual custody effectively and sit there and say, look, this is the NAV of the fund on a daily basis, this is how we've got to that NAV, to give the comfort to the trustee so they can regulate the fund effectively?
Yes, that's a really good question. So if we have to prove ownership of the private keys to our trustee, I will not go into the details exactly how that is done, but that's what you have to do. So it's still, these are still difficult things, and I think that's a big barrier to enter in the crypto space. And I think there is potentially a huge wall of money from institutional investors, but things like custody is one major hurdle. Others are like uncertainty around tax and regulation.
Correct.
No, I actually completely agree with you, because I think that at the moment, when even you talk about the most basic sort of the gateway currencies like Ethereum, I think that SEC has actually come out and said, is this a security? So I think that the regulatory uncertainty around this area is actually quite interesting, in addition to the fact that it really depends on the jurisdiction in which we're talking about. Like, all jurisdictions have a different definition of what constitutes a financial product or security. And for the benefit of people that would be listening to this video and didn't actually hear the presentation before, I wanted to ask you about your investment mandate, and I would assume that that would be on the riskiest end of any form of investment mandate. And can you just talk a little bit about that and the investment horizon? Yeah, right. So crypto is probably the most risky assets we have seen. The volatility is enormous. These things can move 30% in a day easily. So it's definitely not for everyone. Our fund is only open to wholesale investors. I think the nice part is that it's not correlated to anything else, so it's idiosyncratic risk. So for a portfolio manager or someone allocating a part of the portfolio to crypto assets, you can actually lower the overall risk of the portfolio, because there's movements that are independent to stocks, equities, everything else in the world. So even though volatility in crypto is very high, you can lower the overall risk of the portfolio and still have like the upside from crypto. So that's really the holy grail in investing. Great. So I think we'll tease that out a little bit later, but I want to come to really Craig and then see if any other panelists would like to add to that. I understand, Craig, from having watched some of your podcasts, that you do a lot of technical analysis of what you think, where you think the market is going, and I understand that. So my question is, given that the market is really arguably dominated by a selective few strong players that hold a lot of cryptocurrency, how does that actually affect your analysis of where the market is going, and how relevant is it?
Hi everybody, I'm Craig. It doesn't really too much in my view, not the way I do things. I'm a technical trader. I've been doing it for 11 years. Foreign exchange, commodities, bonds, you name it, I traded it. and came into crypto with my strategies and sort of was blown away by volatility. As a trader, that's what you want. You live and die for that. It's what you want, right? It's everything.
Fix is your friend.
Exactly. So from my point of view, getting into I wasn't looking too much at anything other than the way it looks on a chart. I basically trade human emotion. That's what technical analysis is. It's as simple as that. It's the ways of buying and selling, the way people do things. With cryptocurrency being that it is still so new, the people that hold on to it, the big wallets that maintain it, it means that there's even less supply, which fuels that demand, which fuels an amazing move. So when you look at trading in traditional markets, you might say, US dollar against the yen might get 3% on a big day. 3% in this world? Are you kidding me? That's the smallest day of the week, right? So the volatility is there. It's absolutely insane. It's a wonderful place to be. The best thing about it, though, is when you manage your risk as a trader, and that is what trading is. It's management of risk. Full stop. You can end it there. Your risk multiple is this. If that's your X risk multiple in foreign exchange, you might get 2 of your risk multiples on a good day. In cryptocurrency, you can get 35 in a week. So taking the same principles that I was able to use and apply in traditional markets, that I can still use and apply in traditional markets, and coming into this sphere, this space, this emerging economy, man, it's blown me out, it's blown me away, and I can honestly say I have not touched foreign exchange bonds, anything else, since. So it doesn't affect me too much, it aids my success with the strategies that I trade.
Can I just ask a question on that? Sorry, I don't have your microphone. Do you want
We on with this?
Thanks, mate. Sorry. No worries. I completely agree with your analogy with technical trading and human emotion, etc. But given the micro size of the investment vehicle that we're dealing with, and given that one tiny piece of news or a rumor about something listing on a certain exchange just blows everything out of the water. What I've found from and I guess I'm just challenging you. I'd just love it. Be really interested in your answer. What I've found is, you deal with the technicals, and then every day, as a trader, you just walloped by the third time that South Korea's come out and said they're banning crypto, or the sniff of an oily rag of Ripple listing on Coinbase or something like that, and it just completely blows whatever technicals you've carefully laid out of the water. And I'm just curious on your response.
It's a really good question, and the answer is liquidity. Slippage is that's what kills a trader. You get slippage, you get too much of it, you aren't going to be around too long. You combine that with a poor risk management profile, and you are gone in a second. How do you get around it? Well, I tend to find that good news happens in good trends. Bad news happens in bad trends. When I say good news in good trends, I mean if the trend's already up and it's moving well, it's not amazing to me that some positive news comes out about that project, because the momentum is carrying it. It is more risk to short crypto, because it tends to go up very, very quickly on those announcements. It does go down, but it doesn't. It tends to spike up more than it spikes down, and more brutal. People are buying in less volumes and they're selling in volumes. So your slippage is your concern. I tend to stay inside of the top 100, and if I'm taking a decent position, I'll stay inside of the big 6 usually.
Sorry, I don't have the microphone, but why do you stay within the top 100?
Liquidity.
Yeah.
Look, I'll invest in lower ranked tokens. Like I don't mind. I'm an investor in this space and I trade. I just can't get out, right? So that's you're holding. I'll invest and I'll hold. Like there's investing. This hat's on this head. I'll invest based on fundamentals, which I was very interested to hear what you were saying, Henrik, about how you're sort of finding fair value and giving a fundamental view other than they all worked at Google at one stage in their life. Tick that box, done. I would like to talk to you about that actually, because that's something that I think's not the Google thing, but more about how do we actually give a value to these projects, because I think a lot of people talk too much about the token itself and forget that this token exists because there's a goddamn business that needs to operate. Is that business ever going to be profitable, or are we just pissing in the wind?
Yeah. Underlying model.
I think we are pissing in the wind right now. I was just going to say, I have a very strong view to add to that. Is I believe we're in a real gold rush sort of moment with this token utility whole thing, and the music's on right now, but the music will stop, and we're going to experience that. I'm feeling it's coming soon, but right now there still seems to be some crazy raises going on, and I'm confused. The music will stop. But I think the new tune that's starting to come up underneath right now is this securities SEC regulation and actual tokens getting registered. The security exchange is starting to come online. That kind of real reality and starting to look at like dividend tokens and real actual coins
Yield
with
tokens.
ongoing real tokens, as opposed to fake tokens. And I think what I'm trying to submit is, if you look at valuations, I think if you look at, say, what would be interesting about that is, okay, if you have a dividend, will that crush the market cap completely? Because now you're going to value this dividend, discount it back, and that's your valuation. I think that's an important question to consider right now. My submission on that potentially is that instead of it going down, it might actually go up, because you've got now a token economy around the coin, and potentially now you've got a dividend stream as well that you need to value. And then you've got the hodlers versus the traders, right? And so then you've got two different dimensions of it, and you might get a different market cap completely. And I think that's the dimension that's going to be really, really interesting. I think some of the platforms and protocols with securities right now, I think they're the things we should be really looking at, because they're completely undervalued and completely just waiting to actually come out of the shed. And they will. But I just think some of this other stuff right now, sorry to be poo-pooey, but I just think it's a little fanciful that you would use not just the basic token protocol, or use the protocol's actual coin and use this other token. I just don't know why we would hold 5,000 tokens or in our wallets. It just wouldn't happen in the future.
So Fred, I'm hearing two things. One is you don't think really utility tokens should be really that high, because after all, it is to power the network, and if it's very expensive, it's very difficult for people that actually want to use the network to buy them. So that's the first thing you said. And then the second thing you said, which is interesting, is that you're seeing more security tokens coming out which will actually deliver real value, and I completely agree with you. I think that this year we'll see a lot more tokens and companies coming out and saying that, look, I think the craze for utility tokens may just be a little bit too much, and I think in order to build sustainable businesses, which is some of what my clients are doing, they are looking to comply with security laws. So that is very interesting.
The only thing I was going to add to the trading thing, and I think crypto is always guilty of this, is the emotional swings are too much. So in a rally, people have got targets too high, and they're thinking, Bitcoin 50,000, which might happen, but it's probably not going to happen as fast as people think. And back, not even 1 or 2 months ago, there was a pretty bearish period in the markets, and everyone's saying, Bitcoin's going to zero. Although not impossible, for me, it's a very low probability. But I think the emotional swings, no one's holding a ASX saying ASX going to zero. It might fall a lot, but it's not going to zero. So I think the emotional swings are enhanced, and the market cycles are faster, and you can have what would normally take a decade to play out in the traditional markets play out in weeks.
But do you think that's going to mature right over time? Are you going to find that you think that's going to, as more the market, more people are going to accept
100%.
Bitcoin, it's going to keep tightening up, right?
100%.
ASX coming out with its DLT the other day saying 2021 we're getting rid of chess, we're going this way.
Yeah, and I've been trading bonds for 10 years, and they're boring. It's hard to make
Sorry
money.
for you.
And by the time crypto gets to a normal market cycle, I don't want to be playing with it.
I'm done.
The opportunities are here and now because the inefficiencies.
He's in, he's out, he's gone.
Yeah, he's gone.
No,
What's after crypto then, Toby?
I'm a
Mars.
huge believer in the tech, but I'm going to calm down on it at some point.
So,
When you're flying up in that private
Yeah,
jet
exactly.
so I
to
think
Mexico tomorrow.
Yeah, it is.
So I think if we can draw a distinction between ICO companies looking at issuing tokens as a form of fundraising versus companies like ASX actually having a business case, because what they're trying to do is to say that different organisations are holding a different ledger and it doesn't have to be done manually. So there is a use case for the ASX to do that. Then the second question then becomes, well, we actually don't, some of them are saying that, well, we don't actually want to settle that quickly because we need to move funds and we actually need time to do all of that. So that's a separate question. They've applied it to making sure that the ledgers are consistent. So I think that that's actually quite interesting. And that's a real use case. So if I can ask Fred, I know that you have recently started up HiveX, and it's really interesting because not only is it an OTC desk, but I'm a real fan of this because I can actually pay my bills, so you can do BPay. This is great because it actually says, well, I hold crypto, but how can I actually use it without transferring it into fiat? Can you, given my regulatory background, so I'm a regulatory lawyer and a VC lawyer, I'd love to hear about what your experience is. Yeah.
No comment. That's right.
On advice of counsel,
right.
I'd like to play the fifth.
Privileged.
But precisely because you are complying with off-track regulations and you are doing the KYCs. So you're so far the only company that's doing that. But the real question is, does the KYC process and AML process actually involve figuring out where those tokens come from? And I don't actually know that. I'd love to hear about your experience.
Yeah, so we do KYC. We are registered with AUSTRAC as a digital exchange. And we have a large number of things that we need to do and comply with that. And we've had a few flags as well, and that's been quite interesting, to say the least.
If anyone wants to pay my utility bills with through his system, I'm happy. You know, I don't care if they're going to not identify me.
So essentially, when you're doing Hive Spend, basically you go on your KYC, you put your BILA details in, and it's just super fast, right? Now the difference is, and the reason why most people want to use it is because that's really personal spending, and so it's not as much. There's I believe in a tax law, getting spicy here, but that would be personal expenditure, not an investment expenditure, and so I think. Ben, that's not financial advice. I'm not a tax lawyer, but...
I was just curious about the process that you've had to go through with AUSTRAC, because not a lot of people have done that, and only some exchanges that go from fiat to crypto have been dealing with AUSTRAC, and also you, I understand.
Yeah, so again, we do ask, the nature of the person and where they're getting their money from. Generally, you can pick a bad player to some extent. They're normally in a rush for some reason. They have very unusual language. There's all sorts of little flags that you pick up over time when you're dealing with large sums of money. But I think essentially it's a very simple process. If you don't want to get out of all your crypto and you want to make a small payment, you just log on and bang, it's done. It's only under $1,000.
Interesting. Thank you.
The other thing I'll just sort of add to the keeping track of things in the KYC and AML, and it's the thing that sort of bothers me with crypto is it's seen as this grey and murky area, which it's actually the opposite. Like sometimes when we get a big customer come in and they deposit a lot of crypto, we'll do chain analysis on it, and you can see how many hops that crypto is from something like Silk Road. You can't hide anything in blockchain. Like that's the whole point of it. Privacy coins are a different thing, and that's sort of their realm. But the major blockchains have never been more accountable and more suited to current KYC and AML regulations. So I think that reputation needs to be
Yet the
worked
banks are
on and
scared.
brushed up.
Yet the banks are scared of it. I just don't know why.
Because they're circumventing. They become irrelevant.
Exactly.
Quick question. Lovely.
So just speaking of which, Lisa from Thomson Reuters is working on AML KYC solutions. Sorry, just
We use one of your products.
yes, you do. So, but I was wondering, so if that is the case, what are you guys going to do with very popular coins right now, like Monero and Locky, built on that?
We don't deal in them.
Yeah.
It's pretty simple, just stay away.
Okay, that was the answer to that one.
No, but
Thanks, Dad.
obviously there's a purpose behind that, right? There's a purpose for them doing that, and that's where they're supplying towards all those kinds of transactions. So, like, we're in a legitimate business. Like, this is cryptocurrency. We're actually trying to run good businesses here. We're actually trying to serve customers. We're trying to do the best for everyone here. We're trying to help create jobs, create the new economy of Australia. This is not a some farcical criminal laundering thing going on here. And the moment we can just understand is that everyone's trying to do their best, I guess, with this, and the best we can all work together on this. I think it'll actually be a great economy.
So
Hang on. Do you want to?
Yeah.
Sorry.
So I just continue on that, and I know that Henrik has got something to say, but just before that, so if you were AUSTRAC, if you see an exchange, listing Monero or Locky, would you frown? Would you say, okay, there's something fishy going on?
So that could be a bit of an unfair question because Fred's not you're from a finance business perspective. And so I think that question is best dealt with Austrac.
Yeah.
And because Austrac is actually looking at the very issue right now. So
Thank you for protecting the speakers.
yeah.
Bonnie's answered that for us.
Yeah.
High five.
So going back to
Was there any nice questions out in the audience? Yep. Okay.
So yeah, I don't think we should be so negative on privacy concerns, right? Privacy is a human right. Like there is no freedom without privacy, and we don't want our financial transactions to be in the open, right? No one wants that, and I think it's interesting. Goldman Sachs-backed Circle just added Zcash. We probably have one of the best privacy technologies.
So Henrik, now that you've actually brought up privacy issues, I think a really interesting conversation that I've recently had with a law firm partner that I was a co-panel with, we talked about the concept. So privacy laws inherently govern how organisations gather your information. And in Europe, they have a very interesting concept which you don't have here in Australia, which is the right to be forgotten. And there have been use cases where people have actually pushed data out onto the blockchain so that it's there permanently with personal information that's not retractable. And I think that the regulators are grappling with issues with that because it's completely incompatible, dare I say, with the ideas behind privacy and how they're regulated. So there's lots of interesting things.
Testing the reverse.
Exactly.
There was one question just here. Cameron, was it?
Yeah, sorry. I just want to go back to the whole ICO listing subject and versus an IPO listing. I've started a few tech startups, and a lot of other people I know that have tech startups have been, they might be 5 years in and usually coerced into some sort of IPO listing by a merchant bank. And, they oversubscribe it and they come onto the listing, it might come on at like 26 cents, they all get out. And then you watch the share price just come back down to 1.4 cents or trades around 2 cents. Those graphs look a hell of a lot like an ICO. And that is not much different than the way ICOs come on, and for me it seems, and that's the regulated version apparently. So just what your thoughts on IPO versus ICO on early stage tech?
Yeah, I think that's a very good analogy, and I think people need to understand that there's a lot of people grabbing cash at the moment because if you do an ICO, you're selling a utility token, you're not giving up equity, you're not going into debt. It's the cheapest money the world's ever seen. But it's only the correct mechanism for raising money when you actually have utility to offer and create that supply and demand, and that's when speculators like us won't get involved. But it is VC, which is, I guess, traditional sort of speculative stocks listing aren't as risky as an ICO. And I think that's what people need to understand, is that the failure rate for ICOs will be higher because you're essentially taking on venture capital risk, not so much established risk. But it's complicated and very good analogy.
But in some respects, the token, the person that's actually investing in the token, it's a utility token, so they're actually going to use it, what they think is an idea on the network, for whatever use it may be. Whereas
you've seen some of these ideas?
I've seen, I know there's some bad ones out there, but there is some good ones.
Oh, exactly.
So, whereas if you invest in stock in an IPO, you're investing in as an investor to make money. You're not investing, you're not buying it. Like, you might buy Transurban shares, say that your dividend covers your tolls, for example. There's an example of an IPO that where the actual value is actually paying something that you have to use. So
yeah,
that's a
big company.
So I guess what you're talking about is, again, I think we're talking about with the securities thing. It's really what you've got is these utilities, right? And let's just be really blunt. They're trying to create this volatility of the actual coin, and it goes around, and people keep needing more and more of it, and obviously the network effect booms, and then suddenly the price goes up. That's essentially what you're buying into. And my submission to you is, like in startup land, how many startups have you known that have gone under? Like, there's the tens of thousands. Yeah. How many ICOs right now do you know that have gone under?
30-40%.
40%?
Surveys, yeah.
So if you look at the difference there, we're like, literally for some reason there's some issue going on here, and my submission is just these guys got a whole lot more cash, but a whole lot of them are just going to be like falling off a cliff. So you should sell the stock. You should sell the tokens like that. Well, no, sorry, but I'm not giving financial advice. But my submission to you is, like, what we're looking for now is, and my contention and my strong belief is, why can't you buy the shares of the ICO? Why don't you own the company? Like, why are we not doing that? And that's there's no reason why you can't just write up. And I've read the Corporations Act. If you issued it as a security, and so the security has ownership or interest over, and forgive me, I am not a lawyer, but I have read the documents, and they have ownership over the shares, the tokens do, then you could write a corporations, an incorporation, and a constitution where you can form a company with tokens and there be representative of the shares. And that's what we should all be holding on to with these companies. And then those corporations, they should go and duke it out. But right now,
they don't have to do that.
They don't have to right now. We're all just
like taking candy off a baby.
Literally, that's what's happening right now. So, if you're making a 2x, 3x, maybe you could consider, if you were to sell that to make a profit. I'm trying to be like financial advice here, but like that's got that music show is still going on, and when it's going to end, well, I don't know. But right now, just everyone's dancing. We're having a real big party right now.
So I think to answer your question, also, most companies that I advise on actually don't want to be listed as a security, or they have a two-token economy system where they say, actually, I want a utility token to fundraise because that's the easiest way to do it for two reasons. One is you don't have to worry about jurisdictional issues if you are a utility token, whereas as a security, you have a lot of compliance and disclosure obligations.
Awesome.
And really your disclosure obligations are high, and you'd probably it just means costs.
Yeah. So my submission on that is, I think the things that are going to initially come out really well are funds. Funds already have a lot of continuous disclosure, right? They're already used to it. Or companies who are already used to giving continuous disclosure, when they do an ICO and they provide a security or an IPO or whatever it may be, they're going to be used to doing that as well. Or if you were to tokenize, say, a whole bunch of diamonds, and then you were to track them and you'd know exactly where they are, the value of them, and things like that. Like, people who are already used to doing these things, I think could maybe easily bridge that gap. And I think that is a huge raft of funds out there right now that are almost a little bit difficult and illiquid to some extent. And they're the ones that are waiting right now. This is probably an opportunity for some people out here, but they are literally going to be the place that I think are going to be quickly adapt to that. And then if you go through the ASX, which I have the listing laws and things like that, I think they're going to adapt as well. And essentially what you're going to see is this bridge and this shifting towards and away from this free candy money to real value, genuine companies. And when they raise money, they're actually going to give back to the shareholders. And we're going to build a lemonade stand, and then we're going to give some profits back from selling lemonade.
Okay. So
I've got a question here when we're ready.
Understand your stance. Yeah. Did you want to?
Yeah, we're going to... Do you want to...
I wanted to ask Henrik.
Yeah, I just want to say something about ICOs. So I think these days when a lot of the ICOs we see, they are securities. So as SEC chairman said a couple of months ago that all ICOs are securities. So a lot of the ICOs, they are doing an ICO under Reg D, which means only accredited investors, one year lockup. So that's the majority of the ICOs these days that cross our desk.
Toby?
I just add one thing to this. This innovation didn't happen because there wasn't a problem to fix. There's so much bureaucracy, regulation,
cost.
Walls of these industries keeping people out. Like, if you want to do an IPO, you've got to get all the legals done. You've got to talk to the stockbrokers or investment banks, and the lawyers make complicated terms that need more lawyers to interpret them. Like, there's a lot of barriers.
The banks take 40%.
There's a lot of barriers to entry, and a lot of people clipping the ticket. So this innovation didn't just pop up for the sake of it, for easy money. It's trying to get away from the expensive industry.
Good point. I think there's a question will follow on from that nicely.
I agree. With more and more regulations coming in, and also institutional investors and VCs coming in to the crypto space, would you say higher tier ICOs coming out in the future will be harder and harder for retail, normal investors to invest in?
You'd hope definitely.
Yeah, totally. So it's changed completely in the last 9 months. Like 9 months ago, it was democratizing investing, everyone can participate at the same price. Now we are at the extreme opposite.
Pre-ICOs, you get sucked up.
are in the seed, then there is no crowd sale at all, right?
Yep.
So, but I do agree with Fred. So I think we might move to a world where everything is tokenized, right?
Yep.
So all securities as we know them,
Commodities.
all commodities, real estate, and so on, right? So in 2020, ASX will have their private blockchain and T+1. Wow. But we won't need them anymore, right?
Those
Because we can trade
Another
securities with global settlement on a blockchain.
Yeah.
Yeah,
Awesome.
so-
I'll just get a question down here, and then we'll back to you.
My question is basically that I was at the event last week when the Asset Commissioner was there, John Pryor, and the ATO's Assistant Commissioner was there too, and Austrac's Director was there last week as well in Sydney. My concern is that when people are buying cryptocurrencies such as Bitcoin, Ethereum, and all these other cryptocurrencies, which ASIC treats them as, ASIC and ATO, they treat them as assets, and when you sell them, as securities, when you sell them, they attract capital gains tax. Now, for ordinary day-to-day investors who want to, they see the price of Bitcoin going up, they buy it, but a lot of them actually haven't sold it and take fiat. So once that happens, automatically they would attract capital gains tax, which I think is very important for people to know. And the other thing, the flip side of it, what I was trying to say, was that the utility coins itself do have a role, because even the Assets Commission does not have the answer for that, where they will fit it in. And they're just saying, look, they will consider case by case and see how things will go. But that means that if they're not a security, then it means we will attract capital gains tax, etc. But I guess this is a legal question as well for people to know, because if they do invest in coins which have a utility and which will have a utility, a day-to-day use case, then sort of different kind of tax will apply to compared to when you buy Bitcoin or Ethereum.
So I think to respond to that, I think the best really resource that you can look at is ATO, I think, recently released a statement on how they will tax cryptocurrencies and digital assets, and I think that just take 15 minutes of your time, take a look at it. It's very comprehensive, but my understanding is there is a capital gains tax event where you do have to pay when you sell, regardless of whether or not it's a utility token or not. So,
Bonnie, question over here from the crowd for the panel.
Well,
So,
finish
you're
off
right.
your saying first.
Oh, sorry.
Finish off your saying first.
Sorry, I didn't realise you.
Okay, it's along those same lines, but under 10,000, if it's a utility and you're using it for yourself, there shouldn't be any capital gains tax. So make that point clear. But my question's separate, so if you've got something else to add there.
no, I actually just wanted to respond to what Henrik was saying, and I actually really agree that I think that tokenizing assets and traditional assets, especially liquid assets, it's very interesting, because I was just talking about this, and imagine you have a solar farm where if someone, let's say a hedge fund owns a solar farm, is backing it, now the hedge fund wants to sell it. In order to do so, to find the right buyer with the balance sheet within the time frame, if they have to urgently sell it, is very difficult, and you have an illiquidity premium on top of that. So you're able to tokenize these traditional illiquid assets, like property, like solar farms, like various forms of assets. It's great because you actually add new value to it. And I think that's different to tokenizing a security or a share, where inherently they're very liquid. I mean, it's easy. We're tokenizing assets that is just hard for people to access, and you really just overall lower the barrier and really reflect the real price of the asset. So I think that that's a really interesting thing. And if we can even tokenize a fraction of these assets, I think that it's multitudes the current market value of cryptocurrencies, and it can in fact then have crossover effects on utility tokens, because utility tokens actually power the network to which these assets operate. But at the moment, we don't see a lot of actual, apart from a few people sending, a few Bitcoins or Ethereum elsewhere, we don't really see actual assets being tokenized. So that's really interesting.
Did you want to ask a question?
Yeah, actual question. well, first, what that token does is allow you to fractionalise, which is even better. So a bit different to fraction, but you can fractionalise the asset. The question is more to Toby. Why do you think it's cheaper to do an ICO than an IPO? And why do you think the regulations are any different? Because our legal costs are going through the roof at the moment.
Yeah, well, I guess you're doing it professionally and paving the way for other people, so you're sort of bearing the cost, because even some of the advice I've gotten on the legal and taxation side, I've got to educate the people on the asset class to get it done. So yeah, you're paving the way for the industry, but a lot of things that were done, I guess, before you, not so much in Australia. The Australian industry has been very professional, but there's probably been a lot of international ICOs put together with good intentions, and they've all been executed well, and I think people have derived the value that they were promised, and they probably have been done at low cost. But yeah, if you're doing it here and you're doing it professionally, it's not going to be cheap, because yeah, you've got to pave the way for the rest of the industry.
It's also the players that are involved. There's a lot of bounce at the top, essentially, in the ICO market.
Yeah, I'm sure there is.
Yeah.
I'm sure there is.
Yeah, just quickly, guys, I've got a question about, and I want to open up to the panel. There's a big thing that's, I guess, starting to move into the crypto zeitgeist around what's called the flippening, which is basically where tokenized, I don't know if you guys have heard about it, but where crypto tokens that are in the securitization space are going to essentially be worth more than the utility tokens at some point in time, because right now obviously utility tokens are the red hot market, but eventually we're going to see some kind of shift, and I was wondering when you guys think that'll happen, if you guys think that'll happen, because obviously utility tokens are the big market at the moment.
If I had to take a guess on that, I would say it's inevitable eventually, just because.
Yeah, but if you had like a rough idea.
Sometime this
year. Sometime this year.
Yeah, if it did it fast, it'd be 3 years, but it could be 10. But it's crypto; things happen faster than you expect. So it's impossible to gauge something like that. And the other thing is, we don't really know what we've created here with the utility token world, because it didn't exist 10 years ago. So we can't say that the security space that's been bigger forever is bigger and better, and the utility thing, I wouldn't be so bold as to make a prediction.
But at least you can say that at some point in time, obviously it's going to happen.
Yeah, I think it's likely.
Yeah.
And I'll add to that too, and it sort of covers a lot of things that have been said already about the ICO, IPO, move up, move back down, what we see on the charts, and also what you touched on, Tobias, about the irregularity, the immaturity, the volatility that's in this market. And I mean, I talk about it a lot. I've been fortunate with the podcast show to have some pretty awesome guests. And I've been fortunate to speak to these people about, I've spoken to fund managers, I've spoken to influencers, but I've spoken to people that are in the space creating, paving the way, creating things. What's very interesting is that there is a lot of thinking on your feet. This is an entrepreneurial's playground. It's also a dickhead's playground, excuse my French. If you want to do stupid things, you can still, there's a lot of suckers in here. We're a very low educated market. The maturity in this market, the way that I sort of describe crypto markets is it's like a toddler. Anyone got a toddler here or had one? You know how they just get irrational, throw their toys out of the pram, and they just go absolutely nuts. And you cannot stop them. They're totally irrational, totally emotional, and nothing but a dummy or a lolly can shut them up. This is that marketplace. We are so new. We are an infant market. The reason things are so volatile is because we've got so few players in there. The reason that we see it moving so radically is because so few players don't really know what they're doing. So somebody says one thing and they go, oh, and they get out of it. Whereas once you start to see more money coming in, and I think that however it's regulated or whatever's coming, and the education of the community, we talked again earlier about the cryptocurrency is the word that's openly used. There's crypto assets. It's not just about currency. It's not just about exchange. People keep going back to cryptocurrency and going, oh, the Bitcoin thing, it's fraud. Let's stick our heads in the sand because it's easier not to get educated. As the public starts to get educated about the space, new money comes in. That's why I'm very interested about what Apollo's doing and how they're valuing companies, because once we bring in a new wave of investor that is more intelligent, more smart, that makes a decision of their own rather than following someone on Twitter, okay? They make a decision of their own and they stand by it. We'll still have volatility, but we won't have such an emotionally charged response to every single thing that happens. Great projects are so cheap. Why? Because somebody said so. And that brings massive opportunity for people that know what they're doing, but it also brings a lot of insecurity for people that come in and get burnt because they're listening to the wrong people, they're going about it wrong. You've got to get educated in this space if you want to have any chance of a future here.
Yes, it's a true chat. I just wanted to say, I think that one of the things that's going to happen right now is, I reckon, we saw a big wave of, everyone was punting on these ICOs, and everyone's pulled back, 2, 3, 4, 5, 6, 7x. And what that means is, I reckon what they're going to do, a lot of people are going to do is they're going to take that money and repunt, 3 or 4 of those again, the same amount of ETH or Bitcoin that they've put out. Maybe bank a little bit of it, but this means the show's, because the show's music's still on, the show's going to keep going on again. So that's basically, I think a lot of this money that's going out is basically people going, oh, it's free money anyway. If I go for another bang, another 4x, 5x, I'll just do it again. So I don't think the show's going to stop yet. The show's still going right on. The lights are on, the music's on. So I think it's going to be a while, basically, for that to come back. Because you got free money.
Okay, so
just on one point on what these guys are saying, it amazes me how many people follow other people in this space. And my sort of 10 years as a trader, one thing I always tell people, if you don't know why you put a trade on, because you're taking someone else's reason, how are you ever going to know how to take it off? Like, you can't follow people, you'll get murdered.
But if I can zoom back out a little bit and say that for someone that's just a retail investor with only a white paper, it can actually be quite difficult to assess what's good and what's not, because if we take a look at the terms and conditions of those documents, generally, in a nutshell, they say, oh, this is our vision, but if we can't do it, we're subject to change, and please note that we can change without notifying anyone. So if you actually take a look at the T's and C's, that's the essence of it. So I think that it is very difficult when there's so many going out for us to individually assess, because there's not much to go by. And so it could be that, if I see IBM or some really prominent investor investing in that company, I think that that's something to bet on. But what's also interesting is a lot of these people actually buy an equity and not necessarily only tokens. So that's really interesting.
What you're saying, I agree, because there's so many white papers to read. Not everyone's got the amount of time. Not everyone does this full time.
It's really hard to read. Sometimes it's really difficult to understand what the white paper is actually trying to say. So.
Amen to that. And they're very, very long. And I haven't got a lot of time. But look, at the end of the day, I mean, the plan is to formulate one. That's the point. Have a plan. If you don't have a plan, then what are you doing? You're planning for failure. So whether you go to your trusted YouTuber, and there are some good ones out there that say some good stuff, don't get me wrong, I'm not bagging the whole, influence or whatever you want to call it space. I'm just saying, be careful. People come to, I've got everything's written down. Literally everything is a checklist. I am pretty spontaneous in my day-to-day life, but as soon as I shut that door and start trading, I'm like the most boring MF you've ever met, right? Because I have to be. I can't be this guy when I'm looking at the charts. I've got to be completely objective. So I've got plans for everything, I've got rules for everything, all the way down to my goddamn routine, how I get up in the morning. Like, that's how, you'll probably vouch for that, Tobias. You've got to be pretty strict on what you do to get yourself in a place where you can make the same decision each time.
100%.
And if you don't have a plan and you're just sort of running around watching this and, this person who's got 60,000 YouTube or Twitter followers and is doing a video in the shower tells me to buy this coin. Like, come on, are you kidding yourself? Get smart, get the right people, and get serious. Get a plan.
On that, if you were going to recommend a single book or a single person in terms of trading, who would be your, because there's 1,000 books out there, there's 1,000 YouTubers, aside from your own channel.
Finder.com. It's a good question. The book, it's undoubtedly Mark Douglas, Trading in the Zone, and the new Market Wizards and Market Wizards series. And they will not tell you anything about how to trade. They'll tell you about the emotional journey you need to get ready for, and they'll give you the experiences and trials and tribulations of experienced people that have done very, very well. That's where you can draw inspiration about where your head's got to be. Trading's not difficult, your head's difficult. You're your own biggest enemy. You get your head are in the right place. I tell people to take screenshots of every trade they take, and they're like, oh, that's boring. Yeah, it's bloody boring. you've got to do it. If you want to be good and you want to get good at this craft, you've got to take some responsibility for your actions. You've got to be able to call yourself out when you've made a mistake, and the only way you can do that is by being able to take a snapshot of that moment in time, having an objective checklist to go back to and go, yeah, okay, at that time I felt like this. I don't care about feeling. What is this? Is this meant to be, do I tick that box or not? You've got to be able to have a retrospective view of your own positions and don't have an ego.
Just a question for Henrik. We've got a lot of people saying that tokens are cheap, crypto, certain coins are cheap at the moment. We've got a market where you've got something like EOS, which is 14 billion in market cap, with a testnet and a white paper, and you've got a company like SpaceX that's valued at 20 billion. How do you reconcile real companies, real businesses making real money, sending rockets and cargo to the International Space Station, and a company
and
with
a car. There's a car.
A spaceman into space. But you've got these platforms, these protocols that have these huge valuations, and we're at the early stages right now where technically we're getting in the market at the ground level, but we've got these massive market cap valuations. How do you reconcile that?
Yes, that's a really great question. So we have these big bubbles, right? I don't want to name any tokens, but there is extreme overvaluations in the market, and at the same time, there's this huge upside potential in the market. So I think it comes down to you really need to know what you're buying. Everything you buy will not work out, but you have to diversify your portfolio and do your research. So at Apollo, we think that it's probably too early to invest in the app calling the consumer applications. It's probably too early stage, so we invest more in the infrastructure layer, like the big potential markets for crypto, which is things like money, things like smart contract platforms, cross-blockchain platforms, stable coins is a huge opportunity for crypto assets, security token platforms, as Fed was mentioning before. These are huge opportunities for crypto, so you really have to research these verticals and do the bottom-up analysis within these kind of interesting verticals.
Yes, that's definitely very interesting, and again, for the benefit of people that could just be watching it from home, just this panel discussion, can we maybe go through what we think would be the top 3 things when we either look at independently buying tokens, or as an institutional investor, how do we invest our investors' money? Maybe we can start with you.
Yeah, so you really have to look at what is blockchain good for. So I think the 3 tenets of blockchains are censorship resistance, trustless, and permissionless. So I think things we invest in will have either 1 or 2 or all 3 of these requirements for that particular use case. Otherwise, why use a blockchain? Because blockchain is more expensive and much slower than a centralized database.
So just to add on a question, so given that you're a big hedge fund coming in to buy these tokens, you'd be dealing presumably directly with these companies. Generally, what discount would they give institutional investors over retail price?
So I think that's a really hard question to answer. Probably like Boxstack, they gave the same price to everyone, right? And then you have these extreme cases where there is 50x markup from the seed round to the private pre-sale. So it just varies enormously. There is no average. It's funny, people think that crypto and ICOs are the same thing these days, right? Because a lot of people entered the space last year during the ICO hype. But I think ICOs is only a small part of what we look at. There is a huge liquid market out there, and there is only that many ICOs, right? There is only that many cryptographers out there that really understand these technologies, and most of them have already done their ICOs, so they're already working on interesting projects, right? So, I think the ICO market is interesting, but I think there is also a lot of supply and a lot of companies that are using ICOs as a fundraising mechanism. There is nothing wrong with that, but it's not where we are investing.
So you really talk about investing in blockchain companies and in the businesses. Am I right?
We only invest in crypto assets. We don't invest in equity,
Okay,
but we invest in the protocols, right?
Okay.
We don't.
Yep.
necessarily invest in altcoins or.
Can I add to that question? Just want to ask a question for you.
I think you have to speak into the mic.
Yeah, just want to ask each of you, what is, from an investor perspective, your hodl coin or your favorite coin, I guess, or if you don't want to answer that, what's your favorite project right now? Not financial advice, of course.
Yeah, I'll get to that, and how I was going to answer the sort of first question posed was just saying how I have made some of my investment decisions along the way. And obviously a lot of our journey started with Bitcoin, and the thing that really captivates me about Bitcoin is it's one of the only true pure deflationary assets in the world. And in a world of sort of fiat currencies and quantitative easing where there's just more and more money being printed to keep systems that are more and more indebted alive because we've sort of reached the end of the road. From an economics perspective, that's what captivated me there, let alone the fact that I think this is one of the biggest sort of revolutions in finance and sort of organisation of human sort of capital since like the formation of the common stock company, like, but we're going the other way in decentralisation. Like, it's such a big breakthrough. Like, the internet was a tool for transferring information, and the cryptography that's been applied to this means we can now transfer value electronically, and that's a big breakthrough. So like Bitcoin, I think, has always got to be looked at very seriously. And then two of the other projects that I am personally very interested in, one is OneChain, and the other one would be Ravencoin. And they're right at two different ends of the spectrum. OneChain is
Ravencoin because of the Overstock CEO? Like, is there the institutional influence into Ravencoin? Is that
well, I was more talking about the sort of philosophies of each project. Ravencoin's sort of pure, trying to be Bitcoin, trying to be decentralized, trying to be ASIC resistant. It's trying to be sort of more puritist than even Bitcoin. And then OneChain is more trying to be a bit more corporate. It's a bit more centralized. It has a team. It has someone to steer that ship, which I'm agnostic to both approaches and can see the merits in both. There's a lot of people that take one side of these sort of blockchain wars, Bitcoin, Bitcoin Cash, and all these things. I'm willing and try to look at every angle there is. So I think each different coin requires a different approach, and I guess my approach is to find what I think are the merits in each coin and move on from there.
Yeah, so I guess my sort of three things start firstly because I built Finder from my kitchen table up to a 200-person company. I've made many failures along the way in the internet. I've been in the internet for 15 years. And along the way I've seen so many ideas and people have come to me and pitched their business. They want me to be an investor or advisor or whatever. Basically said no the entire time along the way for all sorts of reasons because I was building Finder. And I learned also through that process what are actual problems that need to be solved and what are not. And there were companies that would come in and compete with us and go, we're gonna we're gonna do this, we're gonna do that, we're gonna not charge anyone any fees and things like that, not gonna charge the banks any money. It's like, okay. And literally they would come and go. I remember the press releases and I was like, okay, you can archive, take a screenshot of that because you will not see that company in very long. And I guess the first thing I look at, so from that 15 years, when I look at a project, I look at how difficult is it to market that and get that customer. So if whenever I look at someone and everyone doing a presentation, and maybe this is some ICOs or businesses here launching, if you can't explain to me in at least 2 sentences what you do, then I'm a relatively competent person. And you can tell me all the technology you like, you can tell me about marketing, every single dimension of business, and if I can't understand what you've just said to me as a customer, has no chance. Because if you look at the most successful businesses in the world, think about the way they're advertised, right? McDonald's advertising, it's got a $1 coin and a cheeseburger below it. $1 for a cheeseburger, I get it, I know exactly, and that's why they sell a whole lot of cheeseburger. Actually, they're a real estate company, right? At Finder, you go there, you compare, you find a cheaper deal. And that's what you do. You just compare all day. You save yourself some money. So the same thing you should apply. So when I look at a lot of these businesses, if it's not that simple, so like Bitcoin, like you said, then Toby as well, it's a store of value. It's like gold. Bang, I get it. For these other ones, I'm sitting there and I'm like, I don't actually understand. I understand the English words you've said right now, all of them, but they don't collect together to mean anything for me. So that's the first submission. So that's why I like Bitcoin as well. You can be a purist, you can be simple and keep to it. The second thing I look at is the team. Now, what I tend to do is go on their LinkedIn profile, and I've hired probably about 300 to 400 people all around the world in all different types of cultures and all different types of languages. And my experience is you can see in people's profiles who are going to be good employees and who are not. And there's a great book called Top Grading, written by a very, very esteemed recruiter who basically, from that we've been able to pick out great people and who aren't. And I just basically go and say, would I hire that person? And if I see someone who's in blockchain, but previously they were like a cat handler, or they were like, you're going to run a company and you've been in basically corporates for 15 years, doing 1 year stints, flipping your jobs, darting around to the next industry and never staying put, I'm running away. That's just people you want to see is 3, 4, 5 years straight stints in a row, all nicely connected, leading up to something. You look, and again, that's why I look at things like EOS for me, is because you've got Dan Larimer, a guy who's delivered BitShares, a guy who's delivered Steemit. There are operating companies, they're currently functional. I look for experience, and then they're going to work. I think if I went today and said that I'm going to do, just with due respect, this is not, I do not have an ICO, I'm not doing an IPO for Finder, but if I was to say I'm launching a new internet company and I'm going to do this, you'd kind of back that I'd have a few of the, literally, I've got a playbook that it's pretty much I'm going to roll out. So I look at those teams, I look for those kinds of people. I think at the end of the day, they're few and far between, I guess, and I appreciate, with due respect, rocket scientists and doctors and all these people building companies and things like that, but that's, to me, is academia, and then there's business. And business is cold, dark, loneliness, like being a trader, I could imagine as well, sitting by yourself, being the last one to turn the lights out, the first one to turn the lights on for 5 years straight, otherwise you're not building a real company. And you've got to go through those downs and ups. They're the ones that are going to survive at the end of the day.
So having a really good team. And what would be your third criteria?
That wasn't enough. All right.
What's 2 criteria?
You're a taskmaster. I love it.
Am I being too demanding?
If you've made it through those 2, you're doing pretty well. So the last one I look at, and it's kind of just basic maths, is I go, okay, how much is the price of this coin and what's it expected to get to? And you just kind of look up at the chart and go, okay, what market cap should it potentially fall within? And you go, is this bullshit or is it not? So I shouldn't say that, edit that out. But that's basically very, very foundational. Where is this going to go? And again, I guess from that I go, okay, well, are there any relative competitors in that space? And that's why, again, going back to what Toby said, is I look at Ravencoin and I'm like, this is going to be an unlock of the century when securities are big. Literally going to be massive. And the fact is, because there's a changing in the waters, there's a change going to happen. And people don't buy changes down the water because they were looking at all the top service like you were saying before. And literally, and I think you're right, Greg, as well, because literally it's all going on up here, but really underneath here is where you can look. And that's hard. I think there are a lot of big projects that are actually very quietly who have raised money as well. And they're going to be massive. I haven't invested in them, but
right.
I have a question. There's 3 for you, Bonnie.
Great, perfect. So Craig,
and then a question. Yeah.
And then we have a question there.
Do
you want to?
First?
3
what
things to
he
look
said
at.
first. So you talk about somebody like the LinkedIn thing. I find it bizarre that people don't go there. You talk about the people that have had the run up, the people that have got experience in the industry. I mean, trading is a pretty lonely place at times, and so is business. Try being a trader who runs a business. There's a reason I have no hair, and it's genes, believe it or not. But yeah, I'm with you on that. And some of the things that people don't do are so simple. Something as simple going on, I had a friend, here's a story for you, right? A friend of mine sent me, and this is a smart friend, this is a friend that has a lot of intellect that clearly was not being exercised at all. Sends me through this white paper, it's like a little brochure. I got through the first page and went, this is rubbish. I thought, I'll humour him. Went and looked at the team. 2 had two had LinkedIn profiles, 1 didn't. 1 had a profile for an ICO that they did a raise for, that they were claiming for, that never made it to anywhere. Didn't even raise. And this person just decided to get, this is how dangerous hype is, okay? Wrapped up in the hype. Remember, anyone who's saying to you, this project's great, are you involved in the project? Yes. Of course it's great. I've never taken a trade that I didn't think would be profitable. Ever. Why would I do that? Every trade I take, I believe is going to work out. Why? Because why would I put my money into something that I didn't?
So team essentially.
Team is number one. Absolutely, team is number one. Put a bit of time and research into that. It's not difficult to do it. We don't have to do big searches. It's pretty straightforward. Number two is, and probably this should go above team, because if you don't have number one, there's no point looking at number two. Does this business need to be there? Is this business going to actually survive? Is this a product that the world needs? All right, and the third part to that is the token. Does the token, is it literally just a mechanism for raising capital? Because it's a wonderful one. If you want to raise capital, go chuck a token against your business. It's nice and easy. Within 6 weeks, you've got your round. Whether you get this much or this much is up to how you market. All right, it's not difficult for the world of raising, as was sort of previously brought up before. You've got to make sure that the token's actually linked back to the successful outcome and execution of that platform, of that business, whatever it may be. It's got to be linked somehow. They can't just go and raise your money as a token and then go off and work over here and it doesn't link back to the success of your token. You're not just feeding them money for the sake of giving them money. It's all got to wrap together.
Actually, that's exactly what, if you take a look at Ripple's white paper, that's exactly what they say. Essentially, in a nutshell, they're saying that we don't really know how we'll execute this, but give us money and we'll do something with it.
And I'd say they've done a pretty bloody good job.
And ASIC's just made it very well known that any dodgy ICOs, ASIC's all over. So if you're saying you're going to do something and you're not.
Yeah, so that's quite timely, because I was actually in a meeting, a closed door meeting with ASIC and a couple of other law firms just before Christmas, and in fact that at that stage they were actually saying that we're seeking delegation from the ACCC, because part of the problem is they're so caught up with having to answer, is this a securities, is a financial product? Actually, they're not interested. They are interested, but the secondary question is really, is what you're saying misleading and deceptive to the public? And in fact, news just came about that ASIC is climbing down on one of the Australian ICO companies, but for a different reason.
Yes, awesome. Question over here.
So did you say?
Yeah, to come back on the US big valuation and all the other market cap valuations, isn't it true that the market cap is actually not the true market cap, because only 20% or something of the coins are actually being traded and the rest is kept out of the market? So the supply and demand of these 10% of the supply is being
circulating.
Yeah. So if you, I think
so I think that's a great question. So if you look at the coin market cap, everyone looks at coin market cap, right? They used to circulate the supply, right? You should use maybe something else like the full dilution.
What was that, sorry?
You should use the full dilution.
Yeah, full dilution.
So if you look at onchainfx.com instead, you can see that kind of data.
Which site was that?
On-chain
FX. Right.
But also like, even if there's no dilution in the coins, just if you have a fixed max supply, only 20% is being traded. So that if that 20% would bid up super high and make a high price, that doesn't mean that that price times the total amount of supply is the market cap, because it's not proven.
Yeah, I mean, I guess that goes back to what one of the first questions with Craig. It's the market. Most of the tokens are being held by some central or founders figure that holds so many of them. So once they move it, how do the charts follow? That's just a question. I think we have to pass the red cue. Thanks, Dave.
Ruben, question? Sure. Kat?
So my question is, do you think that any cryptocurrency can ever replace fiat currency? And if so, how do you think it would be different to fiat currency, or would it? And I guess that's just to anyone.
I think maybe the one interesting area that we research is stable coins. So I think that has a potential. It's a really interesting area that a lot of interesting projects are coming out, and some of them have raised a lot of money. I think that's really interesting if you can create a stable, decentralized cryptocurrency that's a potential $1 trillion opportunity for crypto. I think it's possible.
Yeah, I find it interesting if you look at some of the sort of publications, like particularly The Economist and then also the IMS view on a lot of this stuff. It's more popular than you believe. Like they're actually quite positive on this technology in its current form and also what it can be. So I think they will allow it to coexist. I don't think you'll see a Bitcoin replace a national currency in the Western world, in a place with a struggling monetary system like, say, Zimbabwe or Venezuela or whatever the next crisis-afflicted country is. Like you look at the sort of spike in Bitcoin around the Cypriot crisis and things like that, I think you'll see significant adoption and maybe even some governing bodies say, yeah, you can use this as a currency to tide you through. But I think the sort of national cryptocurrencies will come down potentially from government directives. Like I know China is doing a lot of work behind the scenes on sort of a crypto one, and they like the idea of blockchain because it can increase their sort of total control. So I think you will see national cryptocurrencies, but they're probably not the way we envisage them.
Okay, so I think, yeah, great. So we have to wrap up because we're running a little bit late, but can we just please thank David back there and Oscar for organising this event. They're always here, they're always doing this, and I think that.
Please click like and subscribe, and we hopefully will see Josh at the next meetup where he'll talk about his ICO and launch it on my channel hopefully. This is Aussie Ty, and you've been watching Crypto Current Affair.
Click like and subscribe and join me on this Crypto Current Affair. Just because it's double doesn't mean it's a bubble.